So, Linz, I thought it'd be a good time to talk about fixed rate mortgages. There is a lot of noise in the market about this fixed rate cliff that everybody talks about, and the dangers that may pose for people with home loans over the next 12 months or so.
Yeah, it's really interesting to see where variable rates are going and how that's going to affect our clients who may have previously been on fixed rates and now are moving into that variable rate phase.
So as you know, what will happen sort of 30 days out or a month ahead, the bank will send out a letter. What will basically happen is the fixed rate will expire and it'll automatically roll over to that variable rate. But as you know, a lot of the times the variable rate that it'll roll over to, one, may not be the best rate and may not be the best, structure for that particular client.
I've had a client quite recently with a pretty significant loan size. Got a letter, didn't think much of it, and they rolled over to a rate that was almost 1% higher than the rest of the market. And so for a number of months there, they were paying significantly more on their mortgage than they needed.
You're talking 10 grand on $1 million loan.
Easily. But once we got in touch, I was able to renegotiate, refinance, and get them into a much better interest rate. So the sooner that we can do that, the better off our clients are. Our clients are doctors, right? They're in their practice. They're looking after patients. They don't have time to necessarily be on top of what the residential housing market, what the interest rates are like, but that's where we come in.
But there are other options for the client to look at. Given the rate landscape that's happening, do you want to just talk a little bit about what they might look at if they're looking at a fixed rate, the limitations on it, what the variable rate means to them and the differences between the two?
Variable rates and fixed rates work pretty differently in the market. Variable rates are basically rates that are able to change. Fixed rates are a little bit different, and it's essentially a contract between yourself and the bank so that they will hold a rate for a certain period of time. Pros and cons to both types of rates, which is why a lot of people might choose something like a split rate, where you've locked in an interest rate on a fixed period for a certain amount of time, but you also are hedging your bets in that marketplace with part of your loan remaining variable.
I think what people may not understand with the fixed rate is there is limitations on how much you can actually pay back into that portion of the loan.
And I think one of the major cons or downsides of fixed rates is often the ability to not have a 100% offset account.
And how do people get a hold of us, Linz?
We've got our website, obviously, credible.com.au.
And they can look out for us on social, so we're on Instagram, LinkedIn, Facebook. Yeah. Hopefully we'll be able to provide them some good solutions to get them into their dream home.